The Q4 earnings season is on, and so far it has been a mixed bag. Amid global macroeconomic uncertainties, which has softened demand, there is easing commodity prices, which has affected the input cost and helped the margins for all major players in the FMCG business, as well as other big sectors that we are tracking at this point in time. Joining me in the studio are my colleagues Suyash and Rakesh Khar. Also joining us at this point in time is Srinath Sridharan. Let me come to you first, Suyash. How's the outlook like? It's been a mixed bag so far for the earnings season.
Yes, Shweta, as you said, earnings season has been a mixed bag. So the earnings season began with IT bellwethers, TCS and Infosys coming out with a weak set of numbers amid a banking crisis that is going on in North America and in Europe. Now, TCS said that although the demand has continued to remain strong, which is reflected by their strong order book of $10 billion, the clients have deferred major spending because of the banking crisis in the West. Now, this was also reflected from the guidance of Infosys. The company now expects a revenue growth in constant currency terms of 4 to 7%, which the analysts say is subpar. Now, Infosys has also guided for a 16% constant currency growth in FY23, which is below the figure of 15.4%. Right. So the guidance coming in clearly shows that the global weak macroeconomic environment is weighing on the IT stocks, like IT companies' performance, and discretionary spending, especially, is taking a backseat, and decision making has taken longer. Okay. Right. HCL Tech, when we are talking about the tech stocks, HCL Tech was an outperformer. It did beat estimates, but again, their European client based was a letdown for them, and in terms of revenue in constant currency growth, it contracted about by 1.4%.
Okay, we will come to sector-specific earnings and how corporates have performed overall, but I want to get your perspective, Rakesh, at this point in time on how corporate earnings have looked so far for you, and what are your big key takeaways?
I would say I would agree with Suha that it is essentially a mixed bag. See, the big ones that have already come in Reliance, it's been very, very healthy. We are yet awaiting SBI and the BFSI pack. IT, to my mind, is on expected lines. HCL is, as he pointed out, has done better than what was expected. There are challenges globally, and when you're linking your business essentially to a global market, in that sense, you can't be insulated from that. But I was just going through the RBI's monthly report, which came out day before yesterday, I guess, and it's quite bullish. In fact, it has asked IMF to, it said that IMF could be wrong about forecast for India for the fiscal that ended just now, and also for the next fiscal. So in that sense, RBI is looking at this robustness from a perspective of great consumption story being intact, and also the fear of monsoons playing truant not being as much as expected. So in that sense, I think post-COVID, if we are really looking at a peak, it should happen in this quarter that we are looking at. There would be obviously some laggards as happens, but FMCG is doing well. HUL and Nestle has already come out. Dabur, I guess, should also give its reports. So if both rural and urban consumption is showing up in these results, I think that's a very, very positive outlook. Okay. Going forward for the next few quarters that are coming.
And the IMF, of course, saying that India's growth would be approximately near 6%.
5.9. No, they lowered it twice. I think that's
further.
What irked RBI, and they came out with
6.2 and then 5.9.
Yeah, absolutely. So RBI has asked for some errors in the forecast. That's the word they used, which is, I think, significant. That shows maybe an overestimation, but a very confident view of the Indian economy at this stage. I need to look at the data closely, and all of us need to look at in terms of this growth which is being reflected. Obviously is a consumption story, but is it also showing up in terms of expanded capacity, what I call the credit offtake? As we said in our earlier discussion, Shweta, you remember that credit offtake has taken place. It's not that companies are not picking up, but is that getting translated into what we call building capex? If capex is built, that means you're building capacity. If capacity is built, that means you're leading to a greater consumption story. So that particular fine line has yet to emerge, and once we look at all the results, SBI did pretty well last time, so that should drive the BFSI pack. IT, I think, is by and large on expected lines, and FMCG is doing well. So both rural and urban, by and large, in terms of the broad contours, are taken care of. There are obviously challenges going forward, and economy, whether in India or globally, there are challenges which are known and unknown. So we must be little, not get complacent and keep doing our good work and be at it.
Not get complicit. I'll get Srinath to come in at this point in time. Srinath, the fourth quarter earnings for financial year gone by in line with expectations?
I think it's beyond expectations. The street had kind of factored the worries about inflation and the Western market slowing down, but it has been, I think, far beyond expectations, and it is probably, I think, in some sense, RBI and others get kind of beyond feelings with beyond expectation results. But let's face it, as Rakesh said, this is Q4, so everything's fine, and monsoon we won't know until Q2 results. So I think until then it's nice honeymoon period.
Okay. I want to go sector specific, and Suyash, I want you to come in at this point in time. IT sector, you said, began on a weaker note but met the expectations as far as the quarter ending March is concerned.
Yes, so IT sector, the top two companies, Infosys and TCS, now they reported muted numbers.
Okay.
But the thing that we need to see from, at least from TCS, their order book continues to remain strong at $10 billion, which is ahead of their estimates. Now there are some problems with the banking sector in Europe and North America, which has deferred the client spending overall. But going forward, Q1 typically is a weak quarter for the IT companies, but since the demand is there, and we also need to understand that these companies are involved in the business of enterprise tech, which has been growing constantly over the years. So the outlook remains.
If I ask you, have you looked at these companies, the IT pack to begin with? Have they been able to expand their portfolio over the years? There's a certain trajectory, there's a certain comfort zone that they live in. The challenge for Indian IT companies is that they get, there's a certain volume of business which is coming. They're building on that. But building also means going beyond the comfort zone. Is that happening? Is that also one of the reasons that we're not really kept pace? And the second piece is competition from emerging pack, which is also right at our back.
Yes, Rakesh, very good point. One of the things that they have been focusing on, especially the bigger ones, TCS and Infosys, is consolidating their client base. And over the last 2 to 3 years, that's what we have been seeing from them. But now, since the banking crisis, and even if we talk about the banking crisis, their client base is at least composed of bigger players. Like, they are not someone who you expect to, like go under in the next. So there are not much impact from the banking sector which we may see, but the order book continues to remain strong and it has been growing year on year. And even the guidance of the order book continues to remain strong, and the numbers are also ahead of their expectations.
Okay. Let's also get Srinath to comment on that. Srinath, the order book remains strong and the banking crisis abroad, offshores, has not really hit India. Would you agree with that?
I would agree with that. I mean, Indian financial system, especially the banking system, is far more resilient. And I don't think the fears or undue fears about the Silicon Valley Bank and others should be even there. I think I would fear the three letters IMO. For me, inflation is something that I will keep watching out for. Interest rate is something that we need to keep watching out for. Monsoon and oil prices. I mean, that's the IMO I keep talking about, in my opinion. This would, I think, going forward, be not only the worry for Indian domestic market, but also overseas market. If you're an IT company today and if you have high inflation in the US, your client base are going to push for lower prices, which means it's going to have lower margins for you. And I think that's a concept which will trickle down quickly. And also a lot of our weightage on our public markets is on IT and banking, and that's the obvious worry on the index, total index. To Shuyash's point about IT sector, I don't think the Indian IT sector, the services sector, has expanded far faster than what potential or capability we have. We have not gone into new age, cutting edge knowledge and consulting space. We're still doing, I mean, sorry to say this, but probably body shopping plus. I think in today's world, where if somebody can offer artificial intelligence and MI, if you look at our own public markets, digital public services goods, I think there's a lot of talent there. Why are we not offering those kinds of services for our IT company? Why are we not taking it abroad? And I think that's where the margins will turn. Otherwise, we're still going to be very happy with incrementally being a IT vendor of sorts for time immemorial to come. That's my worry.
Srinath, to what do you attribute this failure to actually scale up in terms of the, higher part of the value chain which Indian IT companies should attract? You and I know, and we've been talking about for the last, I think, more than a decade about this particular challenge, and we still haven't been able to surmount it. So what are possible solutions to this? I mean, I know the bosses at TCS and Infosys know that, but it's essentially the lower end of the spectrum and consolidating that business, as Suhas said, but not really attacking where the big money or the big revenue is.
Sure, I think if you look at the IT sector, global IT sector over the last 50 years, Rakesh, there have been disruptions, right? I mean, IBM had to disrupt itself, break itself to become what it is today. So every company has to disrupt and do this. So while some of the founders of our large IT companies have been great disruptors and enablers for India to grow forward, but in their own company, they have not disrupted. So I think we are still living in that, let's say, inward grown talent with large hierarchies and incremental growth. So the biggest thing is, can we have a disruptor of sort, which means new age companies, new age IT companies, gig economy, I think, from that perspective. Why not IT companies sitting out of here, but having talent sitting elsewhere, a zoo of sorts. I think that's where we are going to see a lot more knowledge consulting companies come up. Otherwise, it's been very, very incremental one, right? I mean, we've used the words called onshoring, offshoring, half-shoring. I mean, we're just playing with semantics and words. But in terms of actual output, we might have, let's say, we put our emphasis, have gone out and bought companies and acquired companies which have certain consulting skills, but we've not been able to scale that up. I think that's been a very, very sad state of affairs.
Okay. Srinath, before
Shweta, the problem here is that, going forward, the way the global uncertainty is panning out, though both America and China have performed better than they expected in the last few months. There were doomsday kind of predictions about US economy really sinking, as is the case with China.
Right.
But if the IT bosses know that the market is going to be uncertain, and so the ability to disrupt might probably get deferred for another bout of quarters.
Right.
That's a bit of a worrying situation.
Okay.
I completely agree with Srinath that we need to really think some out-of-box ideas if we really have to scale up. One is that you're consolidated, you made a mark, and it's a business that is probably in our pocket, but it's at the lower end of the spectrum. So maybe third quarter of 23, of the current fiscal 24, probably the leadership at these companies would hear what I and Srinath are trying to tell them.
Okay.
Not that they don't know about it,
Right.
but I think they would play safe going forward for the next couple of quarters.
Okay. Is that what you also believe? What's your outlook, Srinath, on IT pack, IT sector as a whole?
I mean, I think very similar. Rakesh, I mean, you hit a nail, right? I mean, when will we have a Dell moment in India, right? I mean, a large listed entity, global player, took it completely private, delisted it and took it private, just because they could not be vulnerable to every 90 days answering analysts and talking about innovation. And look at how Dell has grown after they delisted. I don't think any Indian bellwether, IT bellwether, will have the guts today to say that, let me delist my company, let me take it private, let me rebuild it for being relevant to 21st century. And I think if you look at it, each of the promoters have their own challenge of why they cannot delist, right? I mean, you have a large company which is a cash flow, which is giving 4 dividends a year. They can't delist it for obvious reasons. You have another two where the large promoter families own majority stake or substantial majority stake. So I think these concerns, I mean, we will all speak about corporate governance and ESG in a larger framework, but it also hinders innovation of sorts. Innovation hindered because of ownership structure.
Okay. Okay, let's move on to FMCG there. FMCG, Hindustan Unilever, HUL reporting a 13% year-on-year profit in its quarterly earnings. In fact, Nestle also surprising with its high quarter earnings. What are you making of FMCG?
It augurs pretty well, Shweta, for the entire economy because, there were fears and there's still fears about the rural economy, how it pans out. On rural economy, there are two very, very contrasting views. I subscribe to the 1 second, I'll give you both the views. One view is that going forward with elections happening in these states and then the general elections, generally the economic spend will come down drastically. The other view is that something called election economy. This is a big term now. This is being studied globally and more so in India. What exactly does election economy mean? To my mind, it means that there is greater push for infrastructure spending. Ultimately, if you build large highways, it boils down to the last mile as well in terms of the share of revenue going down to people. Then I think there is going to be stepped up spending on Manrega. There's also going to be more focused targeting of the spends. So in that sense, the rural economy going forward will pan out pretty well. And if the quarter gone by is an indication, then we're really on track.
Okay.
I personally feel that there's going to be a lot of focus on the rural belt, whether through this election economy, the term that I just talked about, even otherwise, states, center, everybody is going to get into the momentum in terms of trying to woo the rural guy, either through a SOP or through a proper welfare economic scheme.
Okay.
So good and safe hands to begin with.
Good and safe hands. Suyash, it's been especially well quarter for FMCG sector. In fact, Nestle's results, they're very, very surprising, beating all estimates in the market.
Yes, so their growth was driven by two things. First, their volumes have increased substantially and the input cost has come down. With input cost, I mean the cost of raw materials as well as the cost of crude. So, whereas your cost of manufacturing is coming down and your margins are,
Absolutely.
your margins are manufacturing
are
cost is
expanding.
coming down and
Right.
your volume is going up. So, margins are expected to, be
Expand.
as good as they are coming in.
Okay, let me get Srinath at this point in time. Srinath, there's something very interesting that CEO, Managing Director of HUL, Sanjeev Mehta said. He said, operating environment is likely to remain volatile, although obviously happy with the results. He also said with inflation easing, market volumes will recover gradually as consumption will pick up. Do you agree with that? Well, what's your outlook on FMCG?
I mean, I do. As I said earlier, I mean, interest rates and inflation both play a role. Let's say the next MPC of the RBI, the interest rates were to come down. The borrowing cost for the not only for the manufacturers but the entire downstream distributors, dealers, and everybody comes down as well. Two, let's be very careful. The last 2 years, despite high inflation, our companies have grown. So, which means if there were no inflation adjusted to inflation, this would be a far higher growth. So, from that perspective, I think we have a very, very easy Q1 ahead. Q2 is where I'll be a little concerned because that's the time we will see monsoon or lack of monsoon, whatever it plays out. But Q1, very clear. I mean, the inflation has been eased out, so which means consumption would increase. Interest rates are lower than what it were, or it keeps oscillating, but it's still in okay condition. So I am very bullish about Q1 as well. FMCG, I think, will see a far better Q1 than Q4.
Okay. Do you not agree with Rakesh's analogy of political consumption?
Political consumption, I mean, let's face it. I mean, if that were the case, I mean, I think the market should have already or should have factored in, saying that the next probably 10 months until the national elections, the ABC funding, as we call it, right? Alcohol, biryani, and cash economy, the election economy, I mean, should propel the overall indices. But I think markets will factor it in very carefully. But more importantly, I'm very bullish on the structural, I think, the strength of rural markets, rural consumption markets. We are underestimating it very, very grossly.
No, Shweta, in fact, I also am concerned about, monsoon, how it plays out. But RBI in its report, not that RBI is the gospel truth, but, they would have done some homework better than mine and Srinath's, I guess. So, in that sense, they're saying that we have studied the monsoon threat. I mean, but by and large, I don't remember the exact sentence. They're saying whatever damage of this unseasonal rains has happened, it's by and large contained. And they're saying that we need to watch out, but not be unduly concerned. Okay. So, let's hope that monsoon, is friendly
because
to the
there's still talks of whether there's going to be an El Nino or
absolutely.
not.
So they mentioned this term, but they're not red flagging it.
Okay.
When you red flag something, that means this is really a gray area. There's the word used containment. So if containment is there and the general, there's a pent up demand which is showing up and the aspiration level for Ye Dil Mange More in rural India as much in urban India, that should fuel the growth levels.
Okay. Let's move on to BFSI here. How's the BFSI sector done so far? Suyash.
So, Shweta, the banking sector has so far, so HDFC Bank and ICICI Bank have come out with their results and they have reported good set of numbers. Now, their healthy earnings were driven by a steady rise in net interest income for them, and also the asset quality for the sector is also improving, and along with that, since the interest rates are expected to go down, so their earnings could pick up.
Okay. Earnings could pick up. Does that also mean that the banking crisis in the US hasn't really hit Indian shores? And why is Indian banking system so resilient? We keep talking about resilience of Indian banking system, but I want to understand at a fundamental level what keeps us, insulated from what's happening abroad.
There's no definite one-liner answer to it. I think the answer is in our inherent democracy. There's no single institution which guides them, rightly or wrongly. So there are checks and balances. If you have a truant ATM, you go to Twitter and the entire banking system gets into trouble. Though we have also cases of ATM machines itself being looted. So that's another story in urban India. Okay. But when it comes to regulation, I think, we have an appetite to put, red flag it, if I can use that phrase again. So in that sense, the finance ministry, the RBI, and there is a cross sectional approach to see that our system remains robust. And we have by and large also worked assiduously to try and clean our NPAs. That's one thing that has happened. Second, also, as we were discussing in our edit meeting, the Indian banking system is not like the foreign banks, SVB being a case, focused. The portfolio is far largely diversified than being invested in one particular sector, which could go haywire.
Okay.
So in that sense, but nobody has exactly the right answer. How is Indian banking robust and how long it will play robust?
Okay, well, we hope it remains robust. I want to get at Srinath's perspective. Srinath, not just that the banking sector overall has performed well, but I think what augurs really well for me personally is that banks' deposits have also stood at 11.8 lakh crore, which sees a growth of 10.9% year on year. This comes at a time when many financial institutions in the US are witnessing a bank run. So there's still trust in the Indian banks.
Indian banks are far trusted. If you look at, despite the FD rates, deposit interest rates being so low when you compare to the other asset classes, traditionally people have always trusted an FD more than other asset classes. And I think this US or Silicon Valley bank phenomenon and all that is overrated. It's probably for probably 1 or 2% of the Indian English-speaking educated folks like all of us who keep talking about all those. It really doesn't affect most of us. But again, I want to add on to what Rakesh feels about the Indian financial resilience. I would here give a lot of credit to RBI and other financial regulators. We might think they're far conservative, far more prudent, and probably, let's say, ultra slow is the feeling from outside. But I think that is exactly what kind of makes our system safer. It's okay for a regulator to be conservative and prudent and ask 1,000 questions rather than shut a bank or shut somebody and say, hey, oh, sorry, we didn't ask because we want to leave it to market demography. So I think that is a big comfort. And earlier, I'm sure the market would have heard the RBI governor today in his opening address for the RBI's first global conference on financial resilience. He covered some of these points brilliantly well. They don't intervene in the individual entities, financial entities' operations or questioning how they run things. But of late, they've started asking even the structural nature of business models of the registered entities. I think that's to ensure that none of those SVBs can ever happen in India.
Okay, let's move on to auto sector here. Auto sector living up to its expectations, Yash?
Yes, so the auto sector, so far it has been a mixed bag. The ancillary products and the original equipment manufacturers, especially the commercial vehicle and the passenger vehicle, have seen their margins improving, and that is again because of the drop in commodity prices. So the input cost is coming down, although with a lag. Now EBITDA margins have also expanded for commercial vehicle segments on a quarter-on-quarter basis and on a year-on-year basis. And Maruti even said, like, Maruti's annual turnover for the first time crossed 1 lakh crore mark, right? And this was primarily driven by the new products and the product refreshers that they brought in. And so the utility segment has been seeing a good response. Now, on the other hand, the two-wheeler segment is expected to report a flat growth because of the pain in the rural economy and because of the lower exports. And this was also evident from the report card of Bajaj Autos, which reported a 2% decline in its net profit, and the total sales also fell in double digits, 12% year on year. Right. So and also the shipments of three-wheelers have tumbled now at 40% because of the weakness in the overseas market.
Okay. We were discussing this morning trends in three-wheelers and two-wheelers. While two-wheelers, as Yash said, is going to be muted, three-wheelers is a segment that's propping up like anything. Yeah.
So first, there are three clear strands in the auto market. The upwardly mobile audience looks at the passenger cars, which are doing pretty well. They could have done better had the chip shortage not been there. He mentioned Maruti. Tata Motors also is 1 lakh crore turnover, largely on the global revenue it gets. So two Indian companies in the pack, which is significant. And going forward, I think they're only on the growth path. India's passenger car market is extremely competitive. Maruti, Tata's, Hyundai's driving, and now Mahindra also. Two-wheelers, as you mentioned, is a bit of a laggard, both motorcycles and two-wheelers. But the big thing is happening, which is unfortunately not all that organized or regulated in that sense, is the three-wheeler in the EV market. I don't know who is looking at those numbers, but if you see urban transportation from, say, a metro station, to the next destination, you will see an omnibus of these three-wheelers who are creating a new mobility syndrome,
Right.
and they're supposed to be fuel efficient. How safe they are in terms of their tracking, I don't know,
We don't
because
know.
I don't know who is looking at that as a safety measure.
Okay.
But that's a new era that's happening, and you would notice that this is adding to the overall urban transportation kitty. And I don't know, Shriyas might correct me, on urban commercial vehicles, on the domestic commercial vehicles, I think there would be an uptick. If overall economy is showing up and there is manufacturing, there is consumption, transportation is a key piece, and railways doesn't get the majority of the share. It is facing competition from. So I think commercial transport would also be doing pretty well. I don't have the numbers. Shriyas, any numbers?
Also, with the interest rates coming down, the cost of finance for those vehicles, financing will also come down.
Okay.
Absolutely.
And three-wheelers specifically, because they ease mobility for people living at least in tier 2, tier 3 cities a lot. Do you have any numbers as to what sales are looking like for three-wheelers?
So I have export numbers right in front of me, and exports have declined 40% in the three-wheeler segment,
Okay.
and also in the two-wheeler segment. So exports have been dropping for the segment.
Okay.
So
We wouldn't be surprised there
We
because
wouldn't, of course.
I mean, we're not the best two-wheeler making in the world, but we had made some headroads
Right.
in the emerging economies. But with the slowdown, I guess they're looking somewhere else,
Okay.
or maybe looking inwards.
Okay. Srinath, what's your take on how auto sector has done in the financial year gone by? Do you think supply chains are now getting back on track with auto numbers looking good?
So the year that went by was fantastic on two counts. Despite the semiconductor shortage, people were willing to wait for longer times to get delivery of their cars, vehicles, whatever. But going forward, the next 2 years mark, I have little concerns. One, primarily from the fact that if you actually look at per kilometer of available urban space, as we rapidly urbanize, our cities get more crowded, the roads are getting smaller because there are no free space. How many more cars or vehicles, four-wheelers would be able to add? And that's a question mark. Two, public transportation. If you look at the government policy, we have been building highways and metros and multimodal transport systems across most of our urban cities. And give it under 2-3 years, do we really need private passenger vehicles to ferry people along? That's the question mark, which is actually questioning the hypothesis that almost everybody says as GDP per capita increases, we will also go the US, UK route where everybody will have a car. Yes, probably everybody will have a car, but where will they park? At least the top 10 cities are going to have that challenge. So which is where, if I were to own auto stock, probably for the next 1 year, but then I will be wondering why.
Okay. All right. I think Wipro numbers are out at this point in time. And since we're still discussing and talking about how top sectors have performed, I think Suyash can come in there.
So Shweta, from what I'm seeing, Wipro has reported a 0.4% year-on-year jump in net consolidated profits, coming in at 3,074 crore. Now the consolidated revenue for the company for the quarter is up 11.17%, and the company is saying that the order book has been strong again, which was the point. TCS and Infosys reporting good numbers on the order deal book. Now their IT services business, including India state-run enterprises segment, is in the range of $2,753 million, the revenue coming in from there. So all in all, seems on a first glance at least, it seems like the numbers are good.